Welcome to Deezen Shira and Associates series of podcasts. My name is Cynthia. With me today is Chet, International Business Advisory Manager here in our Beijing office. Deezen Shira and Associates is a specialist foreign direct investment practice providing corporate establishment, business advisory, tax advisory and compliance, accounting, payroll, due diligence, and financial review services to multinationals investing in emerging Asia. Since its establishment in 1992, the firm has grown into one of Asia's most versatile full-service consultancies, with operational offices across China, Hong Kong, India, Singapore, and Vietnam, in addition to alliances in Indonesia, Malaysia, Philippines, and Thailand, as well as liaison offices in Italy, Germany, and the United States. Today we'll be talking about general VAT, or value-added tax, taxpayer status. Chet, why don't you tell us about China's new VAT and why is it important for businesses?
China has been implementing a new value-added tax regime over the last 2 to 3 years, and it has been expanded from its traditional role in the area of trade and taxation of goods now into the area of services and eventually across the spectrum of Chinese industries. The value-added tax, it's an indirect tax on business transactions. So it's not a direct tax on a company or on an individual, rather it's on the transaction, and it's a percentage of the value of the transaction. There are several different value-added tax rates, the lowest being 3% and the highest being 17%, which is the VAT tax on goods. Value-added tax regime here in China started in Shanghai, and it was just this past year expanded to all of China. It's very important because it's a significant tax, and because supply chains and company business models can be dramatically affected by the VAT because it is a transactional tax, a tax on each transaction.
Thank you, Chet. So what is the general VAT taxpayer status?
So in the Chinese tax system, value-added tax regime, there are at least two kinds of taxpayers. One is called a small-scale taxpayer, and they pay a flat VAT tax rate, whereas the general VAT taxpayer is charged different VAT rates on transactions, ranging 3% to 17%, whereas the small-scale payer would only pay 3%. So it seems there's a disadvantage to being the general VAT taxpayer because there's a higher tax rate. But here's the key, and that is that the general VAT taxpayer has the ability to collect credit for taxes it paid when it purchased a good, and then use that credit to offset the tax that they pay when the goods are sold. So there is a kind of input credit that can be used against the output tax. So in order to have the ability to do that, you have to be a general VAT taxpayer. This is a status that a company can achieve if it attains a certain level of turnover on an annual basis, and that depends on whether you're a trading company or a manufacturer or a sales-based company. For instance, if you're a trading company, then about 800,000 renminbi in annual sales or turnover would automatically make you a general VAT taxpayer. But prior to reaching that threshold, perhaps a company would still want to be able to use its input VAT as credit to offset its output. So how this can be done is at the very establishment of the company, one can apply to become a general VAT taxpayer.
And our last question of the day, how can a company effectively manage the VAT system?
So, as mentioned, the Chinese value-added tax system is important, and it can be expensive for companies because the tax rates are so high. So it's important to consider the value-added tax in one's business model and to make a plan to manage it well, to manage the VAT tax. So how a company may do that is, I think there are probably 3 or 4 steps here to making sure that value-added tax is handled well. One is just to prioritize the management of the value-added tax. Some countries don't have a value-added tax or it's difficult to manage as it is in China. So in China, it's important to realize how difficult it is to manage and to prioritize it. Company leaders need to understand the value-added tax. They need to understand that managing it properly will save them money, may even ensure that the company is profitable. Another key step to take is to appoint or to find and hire people who are essentially experts in managing the VAT system in China. They will probably be CPAs or a certified tax agent in China. And because of the complexity and the nuance of the Chinese value-added tax, it has to be somebody who has expertise. Besides prioritizing it and finding expertise to handle it, the company is going to need to erect a system, a structure with processes to manage VAT. This can be designed by the CTA, the CPA, or the expert that's hired, but it's going to involve regularly tracking company transactions to see where VAT tax will need to be applied. It's going to need juggling in the books the input VAT with the output VAT so that tax is minimized. For instance, if you have a large purchase of equipment in the early part of the year and incur 17% tax, but then you are not able to use that input credit later in the year, you'll have a problem. So you have to actually make VAT planning a part of your business transaction negotiations. So besides prioritizing, picking an expert and building processes and systems to manage it, there needs to be reporting on VAT to executives so they can make it a factor in business planning and at least be aware of it. Because as mentioned, at 17%, particularly on large transactions, this can heavily affect a company's financials during the course of the year. So it needs to be something that executives, business managers, sales individuals are aware of.
Thank you very much, Chet. Your insight on this topic is very valuable. Thank you for joining us today. For further insight into regional economic environment in Asia, please visit our publishing subsidiary Asia Briefing at www.asiabriefing.com. Here you can find news, commentary, magazines, guides, multimedia, and more, which help guide foreign investment in emerging Asia.